What happens when the job market slows down and investors start counting on interest rate cuts? The U.S. stock market experienced a wild ride this week, briefly soaring to record highs before retreating, all because of one surprising number: a mere 22,000 jobs added in August. That's far below the 75,000 economists expected, and it's sending shockwaves through Wall Street. Let's break it down. The jobs report that shook markets. August's non-farm payrolls data revealed a stark slowdown in hiring, with employers adding just 22,000 jobs compared to a revised 79,000 in July. This missing growth has investors scrambling to adjust their bets on the Federal Reserve's next move. Suddenly, the possibility of a 50 basis point rate cut, that's 0.5 percentage points, at the Fed's September 17 meeting feels more likely than not. Some analysts like Art Hogan of B. Riley Wealth Management are even whispering about a 75 basis point cut by year-end. Why this matters for stocks, gold, and your wallet. Lower interest rates are a classic recipe for market euphoria. They reduce borrowing costs for businesses, making expansion cheaper and profits more attractive. That's why the S&P 500 briefly hit an all-time high of 6,532.65 points on Friday before slipping back. Meanwhile, gold, long a haven in uncertain times, soared to nearly $3,600 per ounce. Defying traditional logic since it doesn't pay interest. When rates fall and uncertainty rises, gold becomes the ultimate safe bet, one expert explains. The controversy. Is the Fed overreacting? Here's where opinions clash. Some argue the Fed should hold steady, pointing to inflation risks. Others, like Olu Sonola of Fitch Ratings, say the weak jobs report seals the deal for a 25 basis point cut this month. But here's the twist. What if the Fed's cuts come too late to revive the labor market? And what if lower rates fuel another asset bubble? Your thoughts? So, global ripple effects. The US dollar took a hit as Treasury yields tumbled, with the 10-year yield dropping to 4.09%. A weaker dollar boosted the euro to 1.17625, while European markets like the Stock 600 and CAC 40 struggled to gain traction. Even oil prices fell for a third day as OPEC Plus prepares to discuss production cuts. Meanwhile, gold's record climb sparked questions. Is this a speculative frenzy? Or a new era of safe haven demand? The bigger picture. This isn't just about numbers. It's about trust. When the Fed signals rate cuts, it's a vote of confidence in the economy's ability to weather storms. But as France and the UK grapple with fiscal crises and Germany's industrial orders plummet, investors are left wondering, are we heading into a synchronized slowdown? Final thought. Markets are pricing in a rate-cutting Fed, but the real test will come in October. Will the Fed's actions match the data, or will they double down on hope? Drop your predictions in the comments. Do you think we'll see a 50 basis point cut in September, or is the Fed playing catch-up to a crumbling economy?